All right, and welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, lots to talk about here. I'm doing this video on Sunday night, and futures have just opened. Let's take a look at the ES. So we are gapping up, and there's lots of news here. A lot of news to cover. So first of all, earlier today, UBS is now agreed to buy Credit Suisse for over $2 billion. So obviously more banking problems in the market, and Credit Suisse is now going to be owned by UBS. So now really just three major banks over there across the pond. Now, in addition, just hitting the wire about 20 minutes ago, Fed is now opening a quote-unquote coordinated daily U.S. dollar swap line to ease the banking crisis. If you guys recall, a few months ago, actually, we did on this channel, specifically myself, Jason, and Lee Justo, we talked about the financial sector. In addition, just to plug my own channel a little bit here, if you go back in December and watch this video I did on financials, I said the banks are breaking down here and there's major problems. This is back in December. If we look at the KRE, everybody's talking about the KRE. I was talking about it back in December when we broke down. And I said there's going to be problems here in the financial sector. We talked about it on this channel multiple times. And, I said, look, this is a kind of a divergence here. You're seeing the KRE, we're seeing the XLF, these banks start to break down and underperform the market. And I've been talking about it on my channel and on here every weekend, that the XLF has, barely made a new high, essentially, relative to December here. As you can see, we barely made new nominal highs, versus the spiders, which, made much more robust highs. The NASDAQ made way bigger highs from December. So, again, this was kind of a, something we had sniffed out here. But the banking crisis, maybe they're, not telling us something about it. It certainly seems to be the case if they're opening a daily dollar swap line. And right now you're seeing it's hard to make a lot out of it right now. So we have futures are basically up, 35, 40 basis points here. We're gapping up on the ES. So it is getting a positive open, but it's almost as if it's a little uneasy, right? So it's kind of, if the market was really liking this, you would think that the market would be gapping up and surging. Like we would be gapping up above 4,000, something like that. Almost get a feeling that there's kind of like an uneasiness going on here. A little bit of uncertainty. Take a look at gold here. Gold on Friday got a power move. Almost new 52-week highs, but new highs for the year. So basically coming into this pivot here. So lots of problems out there, and even Bitcoin. I've talked about that on my channel. If we can flip over here. Bitcoin getting a bid, and I think some of this has to do with people worried about a run on the banks, and they're moving their money into precious metals, moving money in Bitcoin until either A, the dust settles, or until they can figure out what's going on. I know people personally have been affected by this, by the banking crisis, and they're obviously not having a fun time. So some people moving money out and saying, hey, let me just move some capital even into just Bitcoin until the dust settles, perhaps. You don't want to get stuck waiting for FDIC to pay out, especially if you have a lot more capital in than FDIC allows. But either way, Bitcoin into some resistance here, and we've talked about this level on the for a while, 28,000, and that's into that now. So we'll see if we can get some type of a reversal here or pullback there. But big move here, tons going on. Another thing that happened over this weekend. I'm not sure if I have that tweet, but basically many private jets on Friday afternoon flew to none other than Omaha, Nebraska. So if you remember back in 2008, Warren Buffett basically made a deal with Goldman, some type of equity preferred shares. I don't remember the exact details, but there's now, I think it was like over 20 private jets flew from California and really all over the place. I think some from New Jersey to Omaha. So maybe Buffett's doing something with the banks trying to get a deal done here. But either way, crazy market. And then, of course, to top it all off, we have the FOMC on Wednesday. And the last time Powell was speaking, he was in front of Congress, and that was right here on the 7th. And he basically reiterated, he slam dunked the market really hard and, talked basically talked down any talk of, pausing or anything like that. And that was really just 2 weeks ago. And now we're already doing a daily US dollar swap line. They also, opened up a new facility here for banks last week that did inject some liquidity short term. I'm not sure what he's going to say here. So he has to still remain tough on inflation. And his job is not one that I would want to have to do right now because he's the bad guy no matter what. He's got to remain tough on inflation. If he does that, then he breaks the banking system. He breaks the mortgage system. These real estate investment trusts, they're still cutting dividends. There's more talks of dividend cuts in the future. We look at VNQ here every week. This is an ugly chart with a bearish inside bar there on the daily. We cover the home builders very often too. I don't like these chart patterns either, down move and we're starting to consolidate sideways. And then for Powell, then on the other hand, if he eases, he risks runaway inflation. So to what we already have. So I'm not sure what he's going to say. I would assume he's going to try and talk down the long end of the curve a little bit here. Bonds, believe it or not, take a look at the ZB here. Futures are actually down. So maybe the bond market kind of telling us a little bit something here as the bond market's kind of cooled off versus the ES here, which has a nice gap up. So maybe the jaws need to come shut. Maybe the ES will turn negative. I'm not sure. But either way, crazy week. Let's get into the charts here. So let's take a look. So spiders, they did get above this area here. So I'm going to draw this trend line back on. And that was a head and shoulder neckline. So we had the left shoulder, the big head, and then the right shoulder. And we closed above that on Thursday. We did close back below it Friday. But generally, my rule of thumb is, if you close back above it for head and shoulders, I just kind of consider it negated. Either way, though, you still have a down move, and you could make a case. If we go sideways, this could be setting up a bear base. Upside targets here, if we do have upside, you're going to have this trend line up here. And that coincides with that 50 moving average right there. And the 4,000 or 400 whole round number there on the SPY. So some interesting levels that we're coming into here now. As far as the NASDAQ, there's a lot going on here on the NASDAQ, and I'm very interested to see how this trades this week. The NASDAQ is still holding up well, and it's been holding up really all year. I talked about this last year, and I talked about this in the podcast we did at the beginning of the year. So the NASDAQ would outperform in January, and that's really outperformed all year so far. So it's outperformed more so than I thought it would. The thing is, March OPEX is now over with, and a lot of those puts that were decaying into March OPEX on NASDAQ stocks that were bought late last year are now rolled over. They're no longer there. So those hedges are gone, and I think you'll kind of get that invisible hand that's been supporting the NASDAQ here to try and force those puts to become worthless. That is now gone now. So I'm very interested to see if the NASDAQ switches back to underperform, right? We had a banking crisis beginning the last 2 weeks. And here's the pivot on the 6th. We're above that on the NQ. Whereas, you look at the spiders, it's still below that, well below that pivot. So the NASDAQ is well outperformed. I'm expecting that to switch here over the coming days to weeks. So I think the NASDAQ will start to reverse lower, and you'll have the Dow, which has underperformed lately, start to reverse higher, or not necessarily reverse higher, but switch to relative outperformance here. In the Dow here, pretty solid bear pattern there on the daily as well. So below all four major moving averages, down move and just sideways consolidation, no supports built on the way up. Either the Russell 2000, which had a monumental collapse the last week or so, also in a lot of pressure here as it's just coming off the lows, chopping sideways in the lower end of this range. And again, remember, lots of regional banks in the Russell 2000. So that does explain some of the underperformance there. Anyways, let's get over here to some sectors. As always, we already talked about a few already, but let's look at the semis here. So SMH down 0.5% on Friday, but had a nice surge. And again, continuing to show outperformance here. And this is obviously a tech sector. I do think this flips to underperform though. I don't see a ton of upside here. I know you have kind of like a bullish pattern here, up move, and then sideways consolidation, but you're going into a big wall of resistance up here on the SMH. And I don't think that this is enough consolidation right now to get through all of that. So, either way, we'll respect it until proven otherwise. But again, I expect these tech sectors that have outperformed to come back in. There's the IGV via cloud software. And again, into that 100 MA, got a nice bounce off that, and we're kind of flirting with this trend line. We pierced through it Thursday, and then couldn't confirm it on Friday, but it's still holding up. We'll give it the benefit of the doubt. Again, you can have resistance at these pivots, and then the gap fill up there as well. Let's take a look at the Dow transport. So transports are a red flag here, and if you remember, if you go back and watch that video I showed earlier about financials on my channel, I said another thing that is a problem is the Dow transports in that video. And the transports have held up well, but they did something this week that I don't like, which is you close below that big power bar on the weekly. So that's a failed bullish inside bar on the weekly. And typically before a big down move or up move, the transports will make a big move as well before the general equity market will. So this could be a signal here that we might be getting ready to roll over. It doesn't mean we can't rally in the short term, but this is not something to ignore here. So transports in a lot of trouble and closed very weak on Friday. Whereas, you look at the spiders, on Friday, yes, they closed negative. The NASDAQ closed, fractionally lower here, but transports definitely led there to the downside and closed below that 200 moving average there as well. Let's talk about rates again really quickly. So let's look at the 2-year via the ZT. Again, slight gap down, and it's basically, flattish right now. Down a couple basis points here in the Globex open here, but it had a big surge off the lows. The yield curves, I can show you those here. So the 2s and 10s spread has come in pretty sharply. It's still inverted, very inverted, but it's only inverted by 41 basis points, whereas a week or so ago it was over 100. So this is kind of signaling that the recession is getting closer. Typically, when the recession starts, you get the 2-year to get a bid, and then the yield curves start to straighten out. The problem is the 3-month and 10-year is still barely off the lows. So this one is not really doing what you'd expect in this situation. However, 5s and 30s and 10s and 30s are. So a little bit of a mixed bag here. But again, I'm very interested to see where this 2-year is. Now, also very important, sorry, I'm going to do this one more time. The 2-year yield right now is 3.84. Fed funds rate is above, it's well above that. So the Fed could theoretically pause because the 2-year yield is below the Fed funds rate. They can theoretically do that. I don't think they will, though. I think Powell, the Fed does want the market lower. That's that's their game plan. They don't like the wealth effect. They want the reverse wealth effect. And anytime they mention the word pause, the market takes off to the upside, and then it makes their job harder. The problem is they're in this banking, crisis right now. So I don't know how they're going to dance around this. But either way, watch that 2-year and watch the long end as well. Here's the 10-year again holding up there. And as we said, the ZB here via the 30-year is hanging in there as well. Still just kind of an inside consolidation pattern currently. Again, that will obviously be moved by the FOMC. But anyways, let's briefly touch on housing. We mentioned that a little bit earlier. XHB, ITB both have kind of, down move and then sideways chop. So this can put in a bear base if you start to take out these pivots. 65.28 there. On the ITB, on the XHB, it is 63.79 there. So you lose that 100 moving average, and it's going to lose trend there. VNQ, real estate, general real estate equities, again, big red inside bar, and it is sideways there. If this goes sideways further, this can go all the way back down, basically to the October lows there. But you're basically just hanging on to that low pivot there by a thread right now. So that's the state that we're in. Let's look at the XLF. So XLF, again, made a slight nominal low on Friday, did not make a new closing low. And if we look at the KRE here, regional bank ETF, you do have higher lows. So I think right now, I think they're going to try and get, at least in the short term, I think they're going to try and get out ahead of these banks here. There's the KBE, large bank ETF. I think they're going to try and get out ahead of this a little bit and give these guys a bounce. So I think kind of near term, these lows are in. Now, they'll eventually all make new lows. I just don't see it right now. I don't see a ton more downside. I don't see a ton of upside either. But you can get big bounces. If they say something, they come out with some new liquidity program, these things can, this can go back up to, 43 here on the KBE there. I don't see much more. And then there's the XLF. I don't see much more upside than that. Maybe the 200 moving average here for the XLF, but just be careful here. They can bounce these things pretty hard. Now, eventually, again, like I said, I think they're all going lower. But in the near term, I do think we have some short-term lows in. There's the broker dealers. Love this pattern here. Look at this big rising wedge on the weekly. And we talked about that for a long time on here, and that finally played out. Basically held that 50-week moving average there, but not a good technical pattern there. Beautiful breakdown, though. But this going sideways, again, local lows maybe in on this for now, though. Anyways, let's flip over to energy here. So let's look at crude first. Breakdown this week. We got below this pivot here, finally breaking down in this bear pattern. Has started to play out. I'm not touching crude yet. I think we probably have, $50s to $60 to go. So, this is probably, I'll just mark it down for you. Right in here. This is your, if we can get this in. There we go. This is your accumulation zone right here. So I'll be watching this moving forward, but I'm not touching it right now because we've built a bear, and I've got a lot of questions about this, but this is a big, down move, right? And now you've gone sideways for 4 months. So that's a big bear base. The 200-week moving average, that's not really much more than a pit stop at this point because we've done so much basing above it. There's better levels lower, and we're not quite there yet, but we're getting there. So energy finally getting a nice good correction here. Let's look at the XLE. That hit my trend line this week. We've been talking about that for a long, long time. I think these have a little bit lower to go here as well. Be patient. The energy bull run's not over. We just have to have, you have to have corrections, right? You can't just go up in a straight line forever. You look at the monthly time frame. This is still a very nice uptrend, but you went basically parabolic for like the better part of 12 to 18 months. So sometimes you just need to back off a little bit and do some backing and filling. There's the XOP as well. Oil and gas exploration, getting down to this pivot here. Again, we talked about the lower highs, running out of momentum. We said a correction was likely coming. That's getting there. OIH finally getting down to my 250 level. I was talking about that a long time ago, and we never got there on that little dip here, this curl down in December. And as soon as we closed below that level I gave you, 308.31, that 350 target was now off the table, and we went straight down. So energy and backing and filling mode, although nat gas I think is trying to put in a low here. We did have a small gap down today, nothing really major. I do expect a higher low to be made this week, and then I think this has another leg up here. So nat gas, be patient with it, but it's starting to get into what I think is a very attractive level on a retrace here, right into this green bar, and that gap is now filled. So I do expect nat gas to put in a pivot this week, so I'll be watching for that later. Let's get over, before we get to the dollar, let's do uranium really fast. CCJ, nice fall here. And, we went right down into this big green bar with a nice tail candle on Wednesday, and we got a bounce here. I'm not sure what it wants to do here in the near term. Trend is still nicely up, though. You see the nice spacing there between the 50 and 100 moving average. Lots of spacing between the 200 and 100 here on the weekly. And really nothing broken about it. So, the only thing I don't like is you do have these kind of lower highs here. But you still have higher lows for now. If you take this pivot out, then it's going to be in correction mode. But for now, it's holding up. It's hanging in there. Okay, the URNM, on the other hand, this had a little bit of a breakdown this week, although it did come off the low. So maybe they can save it here next week. But just be aware, if these pivots go, this is going to be in correction mode as well. But for what it's worth, it came off the lows decently by Friday. Ag here, via the DBC. This one, finally, we talked about that descending triangle. That one's starting to break down a little bit on the weekly. So if this can get down to that 22 handle, maybe 20, those are your pretty good buy levels there on the DBC. I've worked those out a long time ago. Sometimes these corrections can take a while, but that's just the nature of the markets. Anyways, dollar index via the DXY. They did save this here on Friday. So we just got below. There we go. We just got below that green bar low, and they did save it at the last minute on Friday afternoon. So this still has a decent bull candle here and then a 1, 2, 3 pullback. This can make an advance this week, but if it loses that area on a weekly close, that's a failed pattern there for the DXY. So just be aware of that. On gold futures here, again, big power surge into double top. I'm not sure what it wants to do this week, but right now there's fear out there, and when there's fear, this can bid higher. So just be aware of that. I'm watching 1962. That's my level here by the end of the month. If we get a close above that, there's definitely a shift in gold. If this comes back in, though, then it can remain under pressure here. So we'll watch at 1962. That's the level I'm watching by the end of the month. And then silver here also getting a nice surge, pretty much surging right through that 150. Nice up move, 1, 2, 3 pullback, and then a continuation. I'll call this 2350 as resistance here. You'll have an area here at 23, but 2350 is the big level there to watch on the daily time frame. Platinum, kind of a sloppy, choppy pattern here. Up move, green bar, and you're still inside of it. So this can still trade up as long as that 960 spot 4 level holds. But platinum doing okay. I wouldn't do anything with it personally at the moment. It's just too sloppy of a chart pattern, but it's hanging in there. And then copper here, under pressure this week, breaking through that little wedge that we talked about. So you can see that trend line right there breaking. And now just inside of this red bar. So I still think this needs to go test 375, but it's hanging in there for now. Anyways, lastly, let's get back over to Bitcoin quickly. I want to apologize for last week. I forgot that Bitcoin futures close at 8 o'clock. So last Sunday I said that was a failed pattern, and it wasn't. If you'll notice, right at the end, I did the video around 5 o'clock, and by 8 o'clock, around, I want to say it was like 5:30, I was doing the video, and Bitcoin was all the way down here. And by the 8 o'clock, they pumped it all the way back up to 22 and change. So they saved this green bar, and we got a big bid off of that. So technically that wasn't a failed pattern. I was speaking a little too soon here. But you can see what happens when they save these weekly levels. You can get these big moves, but we are into resistance now. This was your breakdown area. Remember, that was support a long time ago. It became support again. It broke. It should be resistance here, especially considering how overbought you are. 20,000 to 28,000 here in 3, 6, 9, 10 days. That's very overbought. But that's the nature of crypto here. But I am expecting some type of retrace here on Bitcoin. But again, like gold, it can hold up, if there is a little bit more fear out there. All right, let's take one last look at the futures here. Yeah, so they're kind of just stabilizing, just up 1/4% here. So there's the futures there. Nothing crazy going on right now, considering as much news as there is. Maybe the market's just going to kind of pause here until the FOMC. Definitely can't rule that out. But again, watch that 2-year and that 30-year going into this week. I can't really tell you what Jay Powell is going to say. I can assume that he's going to try and keep that long end of the curve down, but it's going to be hard for him to do that with them literally doing backdoor bailouts. So we'll see what the market does here. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.